Okay, welcome to the webcast Completing Your Monthly Return Steps to Success. So we're gonna make a start and go through the presentation. Okay, so pension statements are issued at the end of each scheme year, and the scheme year end is the 31st of March. When your March return is due to be uploaded. Once we have uploaded your March return, the pension statements are issued and blocks and quarantines are raised. So you need to ensure your March return is fully completed and sent in on time. If you follow these steps to ensure pension statements can be produced successfully. So step 1 is to ensure all your active members are included on the March return, even if you don't pay them that month. This could include members who are currently on no pay due to sickness or authorised leave, and it can also include casual members who don't work any hours in March. If you do have a member who didn't work and are casual or on nil pay, excluding sickness, you need to complete the return with 0 where appropriate. Casual workers must have the part-time indicator flag set as CS on the monthly return. If a casual worker has the indicator FT for full-time or PT for part-time, you will receive a block or a quarantine process if there are months missing or months where the record is showing 0 pay when we would expect it to have some recorded. Step 2 is checking that all your leavers are up to date. To do this, you can request an outstanding leavers report from your pension fund representative to find out if you do have any outstanding. You do not need to include anyone on the return that has left. Please ensure you have submitted the leaver or retirement notifications for all your members that have left and are no longer employed. Statement queries are often result from records still showing as active after the member has left and we're waiting for a leaver or a retirement notification. Step 3 is that you must include the rate of pay. So we have a rate of pay column on the monthly return and it is mandatory for March. The rate of pay column should have the full-time equivalent rate of pay as of the 31st of March 2022. If you have any members that work term time only, please apply the term time only factor. This would only be for West Yorkshire or Lincolnshire members. If you are a Hounslow or Barnet employer that has members, do not apply the term time only factor. So for West Yorkshire and Lincolnshire members, if you have somebody that works term time only, so they're contracted to work a certain number of weeks throughout the year, then you need to apply that term time only factor. So you'd use the salary or the rate of pay as the 31st of March, and then you would apply the term time only factor. So if somebody that worked 44 weeks a year rather than the 52, you would take the salary, the full-time equivalent salary, divide it by 52 or 52.14, and then times it by the number of weeks they're contracted to work. And that is the figure that we will require in the rate of pay column. It should be the pre-2014 definition of pensionable pay. So it's what we're using to calculate final salary benefits. And you do not include non-contractual overtime. Anything that is deemed as contractual in a member's contract of employment would be included in the rate of pay. So it's usually the salary or a scale point that is used. If you're unsure, please do contact your pension fund representative. So the rate of pay is shown on the annual pension statement for members who have final salary pension benefits. So you can see here that we've quoted £18,933 as the annual rate of pay. This has been supplied from the March return. So this is what we're going to use to calculate that member's pension benefits. If that pay is incorrect, then we are calculating the final salary benefits incorrectly. So please do take a note to make sure that pay is as correct as possible. We do instruct members, if they do query the pay figures that we're using to calculate the pension benefits, we instruct them to contact their employer because it's the employer that's given us that pay information on the monthly return. So just to go over the rate of pay, it's mandatory for the March return. The monthly returns will not be processed if the rate of pay field is blank. So you do have to have a figure in there that will be the full-time equivalent salary. So you give the full-time equivalent pay for all members, even if they don't have final salary benefits. This pay is also used for the annual allowance check. You can look back at previous rates that have been submitted on the monthly return if we've had any, and they can be seen under the additional data tab in the members record through the employer portal. So if you go to the additional data tab within the members record, look in the earnings and contributions screen or the monthly posting screen, and you'll be able to see what rate of pay we've used in any previous years. So that should help you give some indication of what pay to expect. If the pay that you quote exceeds any tolerance levels that we have set from the previous pay you've supplied, a quarantine process will be started. So do ensure you make the pay as accurate as possible. Step 4 is to make any adjustments to pay. So the March return is the last chance to make any adjustments to the pay you've given us in the scheme year. And the scheme year runs from April to March. We need to use the total pay that you've included on the monthly return to calculate somebody's care pension benefits. So the pay that you should be reporting should be the member's actual gross pay, which pension contributions were deducted from. Members who are on reduced or nil pay due to sickness or child-related leave should have assumed pensionable pay reported on the return so they don't lose out. Assumed pensionable pay, or APP, is recorded under the main paying column when a member is on reduced pay due to sickness or child-related leave. The pay main column can include both CPP, actual pay, and assumed pensionable pay when a reduction applies partway through the month. For more information about assumed pensionable pay and how to calculate it, please attend our upcoming webcast, Understanding APP. So why is pay so important? The pension savings are strictly linked to earnings in the care scheme. So at the end of each scheme year, we use the cumulative pensionable pay to work out how much pension a member has built up. So we take the pay that you've recorded on the monthly return from April to the end of March, and we add that up, and then we will divide it by 49 if they're in the main scheme, and that is the total amount of pension somebody's built up in that scheme year. So it's really important that pay is correct. The pay, or the total pay that we've added together using your monthly returns, is then shown on the member's annual pension statement for all current members, and it's shown there as the care pay. So you can see here that we've totaled up somebody's care pay to work out at £18,932.86. This is then quoted on the member's annual pension statement, and this pay here has been totaled up using the pay that's been recorded on the pay main column or the pay 50/50 column from your monthly returns between the 1st of April 2021 and the 31st of March 2022. The total pay is used to calculate somebody's care pension. So we use that pay and we'll divide it by a 49th if they're in the main scheme, or a 98th if they're in the 50/50 section. And that will calculate the amount of care pension that member's earned in that scheme year. Again, the pay is really important to make sure it is correct. If a member wants to query what pay that we've been received, we will send them back to their employer. So if you've missed any CPP, cumulative pensionable pay, or APP, assumed pensionable pay, within that scheme year, March is the last chance for you to report it. So if you've not reported the correct pay at some point within that scheme year, you have this one opportunity to correct it. Missed assumed pensionable pay can be added, underpayments or overpayments can be corrected, and you can use the notes column to explain any discrepancies to the pay or contributions. So where to report this missed pay? So you need to add any pay that's been missed under the pay main column if they're in the main scheme, or the pay 50/50 column if they're in the 50/50 section. You would include the whole amount of missing pay plus the pensionable pay for March that member has paid pension contributions on. Like I say, you can use the notes section on the return to explain any discrepancies to the pay. Step 5, we need to avoid duplicate records. So duplicate records can be created when data which has been recorded on the monthly return has generated a new pension record. This can happen when a date join scheme has been put on the return, 2 or more lines for the same member appear on the return, or there's been a change in payroll provider and the dates of leaving and joining have been submitted on that monthly return. You can request a membership audit report to see how many records we have set up for each member. Blocks will appear if postings have stopped on one record and start on a new one. This would indicate it's a possible duplication of a pension record. Step 6 is to check your dual employment members. So members can have more than one pension record and should have more than one pension record if they have more than one job with yourselves. A pension record is created for each individual post a member is employed in. Members with more than one job should have multiple lines on the monthly return. The return allows you to record a post reference number and payroll number, which can help be used to identify the different posts. You can also quote the folder reference number once known. Obviously, we need to set the record up for it to be allocated a folder reference number. But once this is known, again, you can use that reference number and quote that on the return to ensure that the postings are recorded against the correct record. You also need to ensure members who are actively dual employed have 2 or more lines on the March return. You need to record the correct pay against the correct post. And if one post has ended but they continue to work in the other, make sure you submit the leaver or retirement notification against the correct record that relates to the job which has finished. Okay, so once you've given us all the information that we require on the March return and you're happy with that data, you're in a position then to upload it. So you need to upload the March return no later than Tuesday the 19th of April, and we will then allocate those pay and contributions to the individual member records. Hopefully it's all been uploaded successfully and there's no blocks and quarantines. But if you're wanting to know what happens once the March return has been uploaded and what happens when we do release these blocks and quarantines and why we release them, then you need to join us in the next webcast in this series. If you have any concerns with the information you are required to supply for your March return, please speak to your employer pension fund representative. We are here to help. Just to add, at the end of this webcast, I was asked a few questions on a previous one that I gave, and there were comments made about what to do regarding the back pay and what happens if we don't add that in time to this year's March return. So if you've, we need to add any back pay that's dating back to the 1st of April 2021, if you don't manage to add that back pay on your March return and you add it to the April return, then that extra pay and contributions will be used in the care pension calculation for the following year. We only use the pay in the calculation at the time that we receive it, even if that's relating to a previous year. Another question was asked is if any contractual duties, additional duties, whether you need to take that into consideration when completing the pay for the annual rate of pay column. Yes, you do. So any additional contractual duties that you're paying your members for, that would be included in that rate of pay for the mandatory month of March. Also, we were asked what pay to use for casual members. So if you do have any casual members and you have to give us the annual rate of pay, then I would suggest that you use the hourly rate, times it by 37, and then times it by 52.14 if they're contracted to work all year round. or if the contract of employment is only available for so many weeks of the year, then you would apply the term time only factor, but that is only for West Yorkshire and Lincolnshire employers. You don't apply the term time only factor if you're a Barnet or Hounslow employer. Okay, hope you found this webcast useful, but if you do have any questions on how to complete your March return, then please do contact your pension fund representative. Thank you.